Welcome to the FML podcast, the podcast on a mission to uncover actionable insights, explore the latest trends, and to catalyze your fintech's growth. Join Growth Gorilla's founder and managing director, Shamir Sachdev, and some of fintech's hardest-hitting marketers and leaders.
Welcome everyone to this episode of the FML podcast. We're joined by Cal Graham, Head of Marketing at Wayhome today. Cal, thanks for joining us.
Thank you. Thank you for having me.
Why don't we start at the beginning? Why don't you tell us a little bit about yourself, your background and your journey that brought you to Wayhome?
My career started out on the agency side. So I spent many years working in agency marketing for kind of marketing agencies, promotional marketing agencies, kind of full service ad agencies. I did that for many years and eventually got to the point where I was looking for kind of alternative opportunities that were, at the time I had a younger family and that could give me a little bit more flexibility, and the opportunity to kind of do some consulting work came along. So I left the agency world and crossed to the dark side and became a client. And haven't looked back really. So that was about 10 years ago. I was doing consultancy work for lots of different clients, but kind of more by luck than any kind of planned judgment. Found myself working with a lot of property clients, so with the likes of Barratt Developments and Lendlease and British Land and Halo Housing and people like that. And suddenly became a bit of a property marketing specialist. And that's really what led me to Wayhome. So through kind of working with those guys, I came across Wayhome. I saw that they were kind of coming along and trying to disrupt the market a little bit with a new way to get onto the ladder. And I thought it looked really interesting. I'd had some experience of working with shared ownership models and wasn't entirely kind of comfortable with how they worked, and I thought Wayhome offered a really, really compelling different way to buy a home. So that's how I ended up here.
I do want to dig in a little bit more about your background, but I think for the just to give some context, do you want to sort of explain to the audience that's listening what Wayhome is and what they do, and a little bit about them?
We've got one product at the moment, which is gradual homeownership, and it's offering people kind of a brand new way to get on the housing ladder. It's a part buy, part rent model. And it enables people to get a home worth up to 10 times their household income. So really, the reason why Wayhome kind of existed in the first place was that our founders could see that people could comfortably afford to rent a home that worked for them, that was often 6, 7, 8 times their income, and they could comfortably afford to pay the rent with no problem at all. And then, the next natural step in the journey was, well, okay, well, I don't want to rent anymore. I've saved a bit of a deposit, so I want to go and buy. They go and speak to a mortgage advisor, and at that point they realise the bitter reality, which is as a first-time buyer, you can borrow 3.5, 4 times your household income if you're lucky. And even if you've got a really decent household income, 4 times that and a little deposit wasn't going to get you very far. And certainly you couldn't afford to buy the type of home you could afford to rent. Furthermore to that, there was very much a divide between those who had parents who could help them get on the ladder and those that didn't. And those that had parents who could help them get on the ladder were able to buy, and those that didn't. And it was just a real injustice. And we just this is crazy. If you can afford to rent it, why can't you afford to buy it, but just buy it gradually? And that's really where Wayhome was born from. So the way the model works is, rather than looking at your income and giving you a nominal multiplier, we actually look at what you can afford to pay in rent. So you can invariably afford a home like the one you can afford to rent, the one that works for you today. So you have to make fewer compromises. So if you were to go down that traditional mortgage route, you'd probably have to compromise on either the space you're getting, the size of the property, number of bedrooms, maybe outdoor space, and location often as well. Or your other option was to carry on renting. So this is a hybrid of the two, really. It allows you to kind of buy the kind of home you actually want to live in that works for you and your family today, rather than kind of make compromises and have to step away from that. And it's totally unique in that the customer takes out no mortgage at all. We're not loaning anyone any money. They don't take on any debt. In the world that we're currently living in, it's not inconceivable to think that at some point in time there might be people buying homes today who find themselves in negative equity in a few years' time. You can't get into negative equity with Wayhome because you haven't borrowed any money. So it's impossible to get into negative equity. The worst that happens if the value of property falls, then maybe the value of your share is worth a little bit less than it was, but you don't owe more money than the property is worth because you haven't borrowed any money. So it's a much safer way for someone to get on the ladder if they've got a smaller deposit.
So I think we can probably combine both a bit about your background and I suppose the launch of Wayhome probably in one question, which is, was your first task to develop the launch strategy for Wayhome? And within that, how did your background and expertise, both sort of with agency experience and your sort of property experience, help you to kind of pull that all together? And then we can kind of talk about how that worked out afterwards.
Yeah, the biggest challenge actually when I joined was we didn't know when we were going to launch. So the biggest obstacle we had to overcome was the fact that the money that we use to buy the homes with our customers is raised from institutional funds. It's pension fund investment. Notoriously, that takes a long time to secure and raise. And we were making good progress. And then, of course, COVID hit, which delayed things somewhat. So our biggest challenge really was from the time that I joined the company to when we actually launched was about 18 months in the end. At that time, we were still advertising Wayhome and recruiting people to come and sign up. So the biggest challenge really there was recruiting customers and keeping them warm to a point that we couldn't tell them when that point was, just that it's coming, it's coming, it's coming. You know, you've got to have a lot of trust with your customers to keep them on that journey with you. And invariably, you know, something like buying a home is so important to people in people's lives. You have to respect that not all of them are going to stay the course with you. Of course, if someone's got another opportunity to buy a home in that time, they're going to take it. So really our biggest challenge was not knowing the exact date we were able to launch and keeping, you know, people warm and, you know, staying with us throughout that period. But fortunately, we're now launched. So
yeah, I was going to say, yeah, you're now launched.
That's passed.
So in sort of developing the launch strategy, obviously knowing that you didn't know when you were going to launch, but kind of like picking out the channels, your method to, you know, your go-to-market strategy, your method to reach that audience. I think one of the things that we get approached with regularly is obviously helping clients with that go-to-market piece. But if I've got to be honest, when you sort of approached us, and I've got to add here, probably the most thorough RFP we've ever come across.
It was backgrounds.
Yeah, well, I was going to say it was, you knew exactly, you know, what you wanted and kind of how you wanted to do it. And I kind of almost want to like break that sort of thought process apart because there'll be other people that are sort of going through that process now. What's your method of approach and how did you tackle that problem?
So I guess we had the luxury of being able to do a lot of testing before we launched and before we approached yourselves as well. So we'd already tried a lot of advertising. We'd done a lot of paid search and paid social. And we had a lot of successes and a lot of failures in that as well. So we had quite a clear idea of what we thought we could achieve. So that really helped us actually. And I think, you know, one of the key things was not being afraid to try things and failing and not being afraid to kind of go out there and test things with an audience that, you know, when we didn't know when we were going to launch and to kind of keep people moving along that journey with us. So that really helped. I was able to kind of pull together experiences from the likes of working with people like Barratt and Halo and Lend-Lease and pull that into the go-to-market strategy as well. So we knew that with Wayhome, we had quite a product that's answering a very specific problem. We're very transparent with our customers. We're like, if you can afford to get the house you want with a traditional mortgage, you really should. Wayhome is here for the people who are creditworthy people, but they just can't be, you know, just because of the dynamics of how the mortgage model works, of this income multiplier, there's just this gap that's getting bigger and bigger between what they can afford to borrow and what they actually need to borrow. We wanted to hone in very much on the low-hanging fruit for launch, which was who are the people most likely to know that they've got a problem, rather than start out with everyone who might want to buy a home and go and tell them all about Wayhome. We started with the low-hanging fruit. So, for example, that would be people who are already looking at schemes like shared ownership and Help to Buy and the government buying schemes because they've already been on a journey where they've realised they can't get the home they want with a normal mortgage. They're already looking at alternative routes. That group of people started to convert very well with us because they understood already that they had a problem. When we went wider and just were looking at people who were looking at things like low deposit mortgages, they were harder to convert because they were still very much convinced that they were going to get the home they wanted with a mortgage. And what we found there was that they would tend to sign up, find out a little bit more, go away, disappear for a few months, go and do their investigations, and then come back later. So it was really about understanding our audiences. We also kind of had some accidental audiences that we never intended to service. So there's kind of two in particular. One was the self-employed. The self-employed people are typically penalised, for want of a better word, by the traditional mortgage lenders. So they're seen as higher risk, and therefore often they need a larger deposit than an employed person. They're often charged higher rates of interest than an employed person. So, it's just so much harder for a self-employed person to buy a home, and often need to provide at least 3 years worth of accounts. With Wayhome, we were finding actually, from our perspective, as long as they can afford to pay the rent, then they are no more risk than anyone else. So we were able to offer Wayhome to self-employed customers with just 1 year's accounts. So we found actually by going out to self-employed people who are giving indicators of being interested in looking for a home, that's proven really valuable as well. And they're now forming kind of a really significant part of our audience. And likewise, because we don't lend anyone any money, people are not taking on debt, we don't charge any interest, there's no fees, all the costs are shared really fairly between ourselves and the customer buying the home. So if the customer's buying 10% and we're buying 90%, they only pay 10% of the stamp duty, the legal fees, the surveys, etc., and we pay 90%, and then they rent our part off us. Because of all that, we found ourselves getting a lot of interest from the Muslim community. They were saying, well, are you Sharia compliant? There's no interest, there's no debt. Are you Sharia compliant? And we were like, I don't know, are we? So we went away and we kind of took the opportunity to investigate that. And we worked with some Islamic scholars who were experts in Sharia finance, and they examined kind of all of our contracts and they said, yes, you are, not only are you Sharia compliant, but according to the Islamic Council of Europe, we are the most Sharia compliant finance product available. That was really interesting because we never had set out to be a Sharia compliant product, but obviously now we are, and we now actively market to the Muslim community as a way to buy a home that supports their values and their beliefs.
I really, really like that sort of anecdote because there's lots of positives out of that. I think accidentally finding out that you're Sharia compliant or your product is appealing to a particular audience. But I think the other thing as well is that you and obviously the other stakeholders at Wayhome leaned into that as opposed to being, and I see this quite often, being stubborn about the audience that you want to go after as opposed to the audience that you can go after. And that naturally has kind of been part of the journey over the last sort of year or so.
100%. And actually, when I look back at our customer personas that were written 3 years ago, and it's almost laughable because none of them are true. So you make all these assumptions prior to launch, and then actually, till you actually go out there and test product market fit, I think, one of the biggest learnings for us has been to be prepared to totally pivot on that. And everything that you thought was true, be prepared to accept that it's not. We've had to learn about approaching an entire new community that we knew nothing about at all, knew nothing about Sharia compliance and Sharia financing and how the Sharia banks and the Islamic banks worked. And that's something we had to go on a very quick, steep learning curve to understand, and how to approach an entire community that none of us were Muslims. So that was a real learning curve, but one that's proven to work really well for us. I'm really pleased to say that we've been received with open arms by the community, who are immensely grateful to have more options open to them.
Digging into a little bit more about the personas, sort of where they were and kind of like where they are now. How do you go about assessing the data and the customers that are actually using your product? Is there like a monthly review that you do internally, quarterly, or is it a bit more ad hoc but still structured?
We are incredibly data-driven as a business, and data is something that we invest heavily in and drive most of our decisions from. So that's at the heart of everything that we do. Equally, we have a group within Wayhome who our customer information group, who are responsible for going out and speaking to customers. So that's aside from the salespeople who are on the phone to the customers anyway, but actually digging into specific customer problems, whether that's kind of pop-up surveys on the website, through to actually, inviting people to do a telephone interview to tell us a bit more about their experience with us. That's something that we do a lot of as well, to really understand our customers and then their drivers and their needs, and to get insights into kind of what's bringing them to Wayhome. And actually what's turning them away from Wayhome is equally important to understand.
The other challenge that, and one of the things that we talk about, and we're sort of talking about Wayhome, was the challenge of the fact that you could only sort of launch out to sort of specific locations at the beginning, because obviously there was a limited amount of cash and there was only a limited number of properties that you could kind of purchase. And I know that when we sort of got involved in that process, there was a lot of data that had been pulled together by your was it the customer information team, did you say?
I think that data you're referring to was from our data team, actually.
Okay.
Our data team have done a lot of work and they pull thousands of data points together to understand where the best places are to invest. Because, of course, we're responsible for investing this pot of pension money in a responsible way for the pension fund, because otherwise, if we buy a load of homes that are not going to yield them anything in rent, or then they've got no money to pay pensions out. So there's a responsibility there for that as well. And actually, it's quite nice circle of life almost, in that the people who are retired, it's their pension money that's now going to help people buy their homes, and it's the rent from those people buying the homes that are paying the pensioners their pension each month. So that's quite a nice little circle there. So yeah, there was a lot of data points pulled together to identify the best places to invest on behalf of the fund. And as I say, we have as much a responsibility to the fund as we do to our customers to make sure that they're investing their savings, if it's the customer, or the pension money on behalf of the fund. And actually, what's quite interesting is when you talk to a customer, they buy a home with their heart. They're like, I've fallen in love with this. This is the place I can see myself growing up with my family and my children, and I have to have this home. And where we step in is we can be the head, we can be the voice of reason. It's like, yes, but you've got a electricity pylon in the garden. You really don't want to buy this home. This is not a good place for you to buy. So all the decisions that we make and that we use data to make to protect the fund's investment is a good decision for the customer as well. And sometimes they might not see that because they've just fallen in love with something. That said, we have now, so when we started working with you, I think we were only looking at 3 or 4 locations. We've now expanded to roughly 70% of English postcodes. So the data is still important, and it will still always be kind of a critical part of any decision making. But we're now kind of much broader in terms of where we're buying, which makes it a lot easier to go out and sell to customers as well, because there's less limitations there.
So the journey from 5 locations to 70% of the UK to a degree was almost forced because of the structure of the actual product. But with your kind of Series A imminently about to land, I suppose there's sort of 2 questions here, which is, retrospectively, what do you think you would have done differently? And kind of knowing that, obviously, bigger budgets are on the horizon and along with bigger targets, how do you think you'll change your approach for Wayhome?
When we launched Wayhome, we were in a perfect storm of that we could never have predicted. So the market, having been kind of after probably about 15 months of COVID at that point, when we went into lockdown for the first time in March 2020, I think everyone thought, well, this is it for the property market. It's going to crash. This is going to be the worst thing ever for the property market. And then obviously that got propped up by things like stamp duty holidays and things like that. So actually, rather than being a terrible market, we ended up launching in the hottest market ever that no one could have predicted. And actually, a lot of our modelling had been based on the assumptions of, well, if this is the asking price, we can possibly get that for slightly under asking on a particular home. Obviously, the exact opposites has been happening, and things are going for well over asking price. There have been properties where, and this isn't isolated, where, we try, or one of our customers tries to get a viewing and they can't even go and view the property because it's already got 30 viewings booked and the estate agent said no more. So we launched in this perfect storm of the hottest market ever for however many years. And that was a real challenge. And what that then had a knock-on effect to is completions taking a lot longer than anyone had ever anticipated. I think the average time for completions is now about 2 or 3 months longer on average than it's ever been before. So obviously, running up to the end of the stamp duty holiday, there were major kind of strains on lawyers' resource and surveyors and all these services associated with buying a home that you just couldn't access because everyone was trying to complete at the same time. So I think one of the key learnings for us has been, or one of the key things that I think we wish we'd have known beforehand would have been actually how long it's taking to complete on properties versus what we had anticipated. And obviously all of our anticipations had been based on historic market data, but that all got blown out the water with the past 18 months in the housing market. That's been an interesting challenge. So we've had lots of customers being very interested in and making offers, and then just the buying journey taking longer than it has done historically. So that's been a challenge. And I think if we could have known that in advance, we maybe would have planned differently, although it's largely out of our hands, those issues. You've mentioned the Series A. That's really exciting for us because that's our opportunity to really scale up. And that's what post Series A is going to be all about, is, taking what we've been doing and just ramping it up and doing it much, much more. I think for a marketing and a customer acquisition perspective, it's going to be less about doing things drastically different, but about doing more of it, having bigger budgets to spend to reach more people, using that data to go further down our funnel. So we've had some good success so far, rather than just setting our performance metrics at the top of the funnel. As we get more and more data, we can set it further down the funnel. And that's allowed us to be a lot smarter with our buying, particularly through Google with your team. That's worked really well. And we've had some really good successes there. I think the other challenges coming up are going to be challenges enforced on us by the likes of Google. So being forced to move to things like GA4 in a year, being forced to use smart ads and all of the Google machine learning and AI. So we're trying to get ahead of the game on that now, so that's not a bit of an overnight shock when we switch to those.
You've spoken obviously about the challenges with Google. Looking at your sort of marketing mix, what do you think's been the most sort of successful channel for growth for you?
I think the core digital channels have been really important for us. One thing I think that we were surprised to learn was that I think we had made assumptions, and again, never make assumptions because they're invariably wrong. But for example, if we wanted to target self-employed people, well, they'll all go to Google and search for self-employed mortgages, and we'll get all of our people in through that. And that just wasn't happening. We were getting no one. Likewise, Sharia compliant mortgages, there was, really kind of low traffic. And we're like, okay, this is going to be interesting. How are we going to grow at scale when there's no searches happening for these terms and we're just not going to pick up our volumes? So really, that's why we moved to paid social and found our audiences through there. So again, it's an entirely different mindset. When someone comes to Google and they're searching for a term that's relevant to you, they're receptive to hearing from you. They've gone there to look, with a question, and you've come up with the answer and everyone's happy. But, you go to Facebook or Instagram, no one's gone there to look for the next way to buy a home. They've gone there to look at, their friends' holiday photos. And when we're coming in and interrupting their journeys with, hey, are you self-employed or are you Muslim? Do you want a new way to buy a home? So that's been really interesting. So we've had to really, adapt what we say, how we say, where we send people to on our website, the landing content, to make it relevant to them. But I think that's been a really kind of important channel to us, the paid social, particularly with our specialist audiences who sometimes don't even realise they've got a problem till you tell them they've got a problem. So they're not out there searching for it because they don't even realise that it's a problem for them until you tell them that. So that's been really interesting. We've also recently started a lot more outbound email campaigns. By outbound, I mean sort of not to our database, but to third-party databases. And that's proven to be very effective for us. If you get the right data and if you partner with the right partners, it can be incredibly effective and incredibly, cost efficient way of recruiting as well. So email marketing has been really a surprise success for us, and will definitely form kind of part of our strategy going forward. I think the challenge will be finding kind of more data that's good quality, because it's all about the quality of the data that you're buying in there, because obviously it's the audience is entirely cold to us because they've never heard of us. So you really have to get that message right.
I know you've run a few sort of PR pieces that kind of brought Wayhome out. I think you had was it the Mirror?
We've been picked up by most of the national press, but recently, a couple of weeks ago, we had one of our first homeowners, Rob and Amy, who agreed to be case studies for us, and that was really instrumental. And I would say kind of another key learning is that real human stories kind of beat everything. Kind of the press particularly are much more interested in hearing from real people than from us hypothesizing. So Rob and Amy were one of our first homeowners. They were interviewed by the Mirror, and that was picked up with them, and that was great. Rob's a self-employed guy. They used to own a family home, but he decided to leave his job and set up on his own. So kind of that involved selling the family home and assuming that they'd get straight back on the housing ladder kind of once they were on their feet again. And, in that, short amount of time, the market had moved on and they were literally getting laughed out of mortgage brokers' offices. And it was like, you're not going to get home for anything like you think you're going to get. And they were really, they couldn't believe it. They really couldn't believe it. The Mirror picked up on that story, which was great. But actually, off the back of the Mirror picking up on it, Lad Bible picked up on it, which was
really
unexpected. And at that point, it went stratospheric. It went absolutely everywhere. Obviously, Lad Bible kind of with a huge presence across social. Naturally, Lad Bible were not on any of our target press lists. But surprisingly, had a really good quality of inquiry off the back of it. I think that just hit home the reality of the problem we're trying to solve it affects everyone, really. That really hit home. So, that was great. We saw a massive spike in our organic and direct traffic, but actually we saw an impact on our paid as well. I think, when people were searching and they saw both the paid and the organic results coming up, we saw, a halo effect from the organic coverage on our paid as well. So that was good. And I think definitely something we'll strive to do more of going forwards is customer case studies. And specifically for our different audience niches, so a Sharia case study, self-employed case studies, just general people who, were going to buy a shared ownership home and chose to buy with Wayhome instead.
Obviously, the house buying process is so entrenched in a very specific way that even when you sort of talk about shared ownership or whatever it is, ultimately there's some sort of mortgage involved. How has Wayhome kind of tackled the fact that actually it's a completely different approach?
It's been a really big one, actually, because buying a home is the biggest single purchase you're ever going to make in your life. And, whilst we're not restricted to first-time buyers, naturally, most of our customers are first-time buyers. So, you're dealing with an audience who are, this is the first time they've bought a home. So naturally, the first thing that most people do is seek advice from those around them. And invariably, a lot of people would seek advice, say, from their parents, because that's who they would turn to for advice on this kind of thing. And of course, their parents have never heard of Wayhome, and they're like, this is this newfangled way of buying a home. I'm not sure I trust this. So one of the key things for us has been not only having to convince our customers, but to, educate the people who they're turning to for advice as well. So the parents, or in the case of the Muslim community, the parents and the grandparents and the wider extended family who all often contribute to a deposit or something like that, they all want to understand kind of exactly what it is you're getting into. So it's been really important for us to borrow credibility where we've needed to from experts. So whether that's in the Muslim community, from Islamic finance experts who have said, this is a really good way, it's a new model, and this is absolutely okay, and it's halal, and to give kind of confidence to those elders in the community who will be advising our customers. Or things like PR is really important as well, to kind of cement that credibility and to be certain that you're not investing your life savings into something that's not going to exist in a while. The other thing that we've been able to leverage and lean into is our fund managers and the people we've partnered with on the kind of institutional investment side is Allianz. Global investors. So Allianz are obviously a hugely trusted brand. They're the fund managers. They're the ones who kind of, have ultimate say on, what we do and don't buy with the pension money. And that's been really good for us to be able to leverage their name as well and their brand, because, that is a brand that people have heard of and they trust. So it's been a really interesting challenge. That said, people really, whilst they enter the house buying process with one set of expectations, which is normally I'm going to buy a home with a mortgage because that's just what you do. They very quickly kind of come around to going, okay, there has to be another way because the traditional models just don't work for so many people. We're also finding ourselves working with government because they recognise that there needs to be innovation in the housing market to fulfil demand. With Help to Buy coming to an end at the end of March next year, there's going to be, even a bigger gap in terms of helping people get onto the ladder who, otherwise would have relied on a scheme like that. So, we're finding ourselves working with all sorts of different influencers and partners to spread the word. And then again, things like the case studies are really important. So when people can see other people that they can relate to who have already bought with Wayhome, then that gives, a kind of a trust and that this is legitimate and it's real and it's, something totally different and new. But yeah, it's been a big challenge, particularly kind of, influencing the influencers of our customers. So if it's hard enough to reach your customers, then you've got to reach their influencers as well. So it's been a challenge.
It's also a testament to the product as well. And I think when you've got a solid product, it's all that more easier. And I think to the product teams and the data teams internally, they've really pulled their weight, in terms of, I know we're just sort of a small cog in the massive sort of machine that is kind of Wayhome, and everyone sort of has contributed to that, and that's why kind of like the Wayhome product is so robust at the end of the day, and it's had that traction. So,
and I think one of our key strengths is that we've never been afraid to try something and fail, and to change and adapt, and throw away all of our assumptions and start again when we learn something. Data's at the heart of all of that. We kind of test and learn constantly. We measure absolutely everything, and we pivot and change things accordingly. So I think if we hadn't been prepared to be flexible and were single-minded about no, this is how it is, we wouldn't have any customers because the assumptions we made were wrong. But that's fine. That's what we learn, and we adapted and we pivoted, and here we are. So it's that's been kind of really important to have that attitude where you can kind of test, learn, flex, change, start again, do it all again, and that's not just in our marketing or advertising. It's every single part of the business, as you say, from the engineering teams to the product teams to data and marketing as well. So it's been a journey, but kind of one that I feel we're probably still at the beginning of. And,
I was going to say,
it
feels like it's been a long time, but actually, it's just a starting point, really, at the end of it all, really. So
and we've got big ambitions. Our North Star metric has always been the number of assets under management. How many people have we got in homes that we've helped that wouldn't have had their own home otherwise? And when you see those families, in how much it means to them to be in their own four walls and to have the security that brings, makes it all worthwhile. That's why we do this.
And to be in the home that they want to be in. I think and not having to make that compromise. I think that's the when I saw the case study, and I was like, actually, that's kind of like hit. I think you sent us a message actually, and it was like we've got our first couple or first family into a home, and it was like, because obviously the sales cycles are quite long. It was like, and that's why we do it.
Yeah, exactly. And to that family, I remember them saying to us, our children are going to wake up on Christmas morning in their own home. That's something we could never have dreamed of otherwise. And, everything that means is priceless to the families. So that's why we do it. That's why, and there's a need for us. And there's a need for innovation in the housing market that has to come from the private sector because, government can only do so much. So we're here to fulfill that gap.
Good stuff. Let's finish up on our quick fire round, and I'll let you crack on. What's the best bit of life advice you've ever received?
Don't be afraid to fail. Seriously, fear of failure, you won't achieve anything.
Awesome. If you could tell your younger self one thing, what would it be?
Take risks. Take more risks. Definitely.
A little bit more sort of light-hearted now. What's your current TV binge?
I've just started watching on Apple Plus I can't remember what it's called, about WeWork.
Oh, okay.
Given that we're based in a WeWork office, so it's quite fascinating.
Oh, is this about the whole when it's sort of the founder and his weird ways and whatnot?
Yes.
Yeah, he's an odd guy.
Very odd guy.
What song do you have on repeat right now?
Anything my kids are making me listen to, normally on Capital. I don't know.
Capital?
I know.
I was expecting Kiss, not Capital.
No, something like Ed Sheeran and Camila Cabello. There you go.
Fair enough. And then lastly, what's one thing I haven't asked that you think I should have?
Where's Wayhome going to be in 5 years' time?
Go on then. Where's it going to be?
Well, hopefully at that point we're going to have thousands of homeowners in their Wayhomes, and really kind of being a first port of call for people when they're looking to buy a home. Here's hoping.
Fingers crossed.
Absolutely. Thank you.
I'm confident. Cal, thank you very much for your time.
Thanks, Shamir.
Thanks for joining us today, and we'll catch up soon.
Pleasure. Thank you.
The FML podcast is brought to you by Growth Gorilla. To find out how our marketing growth experts can boost your fintech's growth, head to growthgorilla.co.uk. And make sure to search for the FML podcast in Apple Podcasts, Spotify, or anywhere else podcasts are found. Don't forget to click follow to ensure you don't miss any future episodes. On behalf of the team here at Growth Gorilla, thanks for listening.